And in the UK, of course, shares plummeted at the open as the global market sell-off shows no sign of slowing down. Let's get the market update from my colleague there, Juliana. Hello, Juliana. Good afternoon. So bring us up to speed with the intraday numbers. Is the London market still in the red?
Absolutely, London is still in the red, Chimazane. It's not just London, of course. Global markets across the world are in the red. Every trader seems to be panicking extremely about what's going on. I think the worst hit region is the US. Microsoft, they've just reported that $62 billion have been wiped off its market share value. Of course, if you have the largest companies in the world, they are going to take the biggest hit. But London is not too far from that. At early trading, we were much deeper, but in intraday, they have regained some of their losses. The FTSE All-Share is down 3.13%. The FTSE 100 is down 3.17%, and the FTSE 250 is down 3.07%. In currencies, the pound is also down on the dollar by 0.02%, down on the euro by 0.38%, and down on the Japanese yen by 0.91%. In London, I suppose the biggest faller is EasyJet, the budget airline. They're really taking the lion's share of the fall. Their shares are down over 30% intraday.
All right, let's look at some of the earnings coming in today. British Airways owner IAG reporting a slight dip in pre-tax profits by 1.4%. And of course, warning of coronavirus hit. What other financial reports do we have out there already?
Yes, we discussed this in the morning, didn't we? IAG, that was the main one that the equities were looking at. But I suppose there has been a little bit of respite because the Nationwide Building Society, which is the bank that most housing experts look at whenever they release their data, they have released some information that suggests that house prices in the UK are again on the rise. In February, they rose by 0.3% year on year. A lot of people still, even though it's a few months ago, still citing Prime Minister Boris Johnson's historic election victory. That seemed to add a little bit of gusto into the market, and people are buying. I believe the average house price has risen from about 259,000 to about 260,000. Of course, that's outside of the UK. You can add an extra 200,000 if you want to live in London. So this is good news. But of course, again, everybody's looking at COVID-19 or the coronavirus, and there are worries that, of course, if this continues, once we start getting the data over subsequent months, house prices actually may fall.
Okay, what would you say the week has been like for the London market, and what is the outlook for next week?
Well, the week for the London market replicates as everything that we're seeing across the globe. I believe traders now, if they're looking on their screens, it's a sea of red. It's been called Manic Monday, Panicking Thursday, Bloodbath Friday, and I think that is likely to continue in the UK. And the UK also have their own other domestic issues, none less than the fallout from the flooding. We had 2 weeks of flooding in consecutive weekends, and we have another flood expected this weekend. Well, not a flood, but extreme weather. And the consequences of that in the UK, because there are so many rivers here, is that there will be flooding. We've got a severe storm called Storm Jorge. I'm sure I'll get that pronunciation right on Monday. That's looking to come and batter some parts that are already suffering in England. So Boris Johnson will have to deal with that. Then, of course, we can't not talk about Brexit. On March the 2nd, which I believe is Monday, the EU's chief negotiator, Michel Barnier, will be meeting with his UK counterpart, Frost. And this will be the first time the two have come together to discuss trade talks since Britain has left the EU. And over the past couple of days, Boris Johnson has been pretty clear that if there is no advancement within the trade talks by June, he is prepared to walk away with no deal. So besides COVID-19 and flooding, Brexit may dominate headlines, business headlines in the UK next week, Jimmy.
Okay, while we wait to talk about all of that next week, let's continue to stay safe from COVID-19. Enjoy the rest of the weekend.
You too.
And stocks in Asia declined on Friday as fears over the spread of the coronavirus globally drove investors to safety. China's Shenzhen stocks led losses among major markets regionally as they closed sharply lower. The Shenzhen Composite dropped 4.92%, while the Shanghai Composite was down 3.71% to end its trading day at 2,880 points. Hong Kong's Hang Seng Index also dropped more than 2.5%. In Japan, the Nikkei 225 dropped 3.67%, while the Topix Index fell 3.65%. South Korea's Kospi was down 3.3%, while the ASX 200 in Australia plunged 3.25%. And U.S. stock futures pointed to more losses early on Friday after the major indices suffered a tumble that sent them more than 10% below their record highs. As at 4:05 a.m. Eastern Time, Dow Jones Industrial Average Futures were 446 points lower, while S&P 500 and Nasdaq 100 futures also pointed to a lower open. Meanwhile, bond yields also continued to slip as the yield on the benchmark U.S. 10-year Treasury touched new record lows. Concerns over the coronavirus have also led several companies to issue earnings and revenue warnings. Microsoft said on Wednesday one of its key divisions may not meet the company's previous revenue guidance. And on global oil market, prices slumped to their lowest in more than a year on Friday, set for their steepest weekly fall in more than 4 years as the spread of the coronavirus stoked fears of slowing global demand. Brent crude futures were down 2.8% at $50.31 a barrel, while West Texas Intermediate crude futures fell about 3% to $45.70 per barrel. Oil markets are hoping for steeper supply cuts by the Organization of the Petroleum Exporting Countries and allies, including Russia. And metals market, their gold prices held steady on Friday as mounting concerns over the rapid spread of the coronavirus and its impact on global economy lifted expectations of rate cuts by major central banks through profit-taking capped gains. Spot gold was unchanged at $1,642.03 per ounce, while U.S. gold futures were up 0.1% at $1,643.50. Among other precious metals, palladium slipped 2.3% to $2,779.30 per ounce. Platinum was down 1.1% at $889.65, while silver fell 0.6% to $17.59 an ounce.